Good morning, traders. Thanks for taking the time to be with me. I've never given a 30-minute webinar before, so like the previous presenter, it's difficult to get in that time. But let me just show you my opening slide here, which is a subset of the overall window that you have. And I have a session in my trading room that's free access every Saturday morning starting at noon Eastern. Just note my email address. You can ask for access, or if you've registered, you'll probably get an email from me about it. And I spend typically up to about 4 hours going over things in detail. So consider this an introduction to this my session that I'll be doing this Saturday. And what I want to alert you to today is that, you know, in the U.S., some of you probably aren't in the U.S., we had an election, and there's Republicans and Democrats in the major parties in this country, and oftentimes they're seen as at opposite ends of the spectrum. And trend traders and scalpers are often seen at the two ends of the spectrum in trading. But I'm here to tell you this morning that there is an answer to the biggest problem unsuccessful traders have, and that's too many losers. And that's the gorilla in the room. I've been doing a series of webinars. This one did some time ago was number 6, and I'm up to number 8 now. And the problem is that traders have too many losers. No matter what they do, they take courses, they buy software, and all of you in the room and my students say this all the time. And the problem is too many losers, and there seems to be nobody that tells you how to reduce too many losers so you can be successful. And that's what I've been doing for 7 years, is teaching that. And so we predict entry losers and not winners. Most everybody takes the idea of getting into high probability winners. And yes, there is a frame of reference for doing that. But the focus of my teaching is not the winners, but the losers. If you eliminate your losers, you automatically become a winner. So we focus also on minimizing post-entry trade management losses. And there's 2 phases to decisions in a trade. One is whether you're going to get into a trade and where you are, and then the second set of decisions is how you manage the trade after you're in the trade. Now, for my students, some are scalpers and some are trend traders, but they all start out as scalpers. But guess what? The scalpers, if you start in the scalp mode, you get into all the trends. And that's the message I want to leave with you. If you remember nothing else from this short session we have, it is that there is a solution for trend traders for minimizing your losers, but you get into trades totally differently than you've ever thought of getting into a trend trade. Now, I'm a full-time trader. I'm in my 7th year of teaching, and I actually trade every single trading day, and I trade 6 markets and futures: the euro, the DAX, oil, gold, silver, and recently I'm also trading the Russell isn't listed there. Oh, the Russell is after the open. Also trade the NASDAQ recently, particularly for helping my students get more experience in my basic course, which is covers all currencies and the Russell but not the ES. The ES is a different animal in terms of the scalp mode trading. And I teach a 2-month advanced course for oil, which has 50 videos, and it's all in 100 or 50 videos in the 2 courses. Just for information, $3,000 for the basic course and $1,500 for the other, and for you'll never spend more than another $1,000, and you get a lifetime in my trading room and with my full teaching support. But before you subscribe, I wanted to make sure you know that you don't subscribe to my course until you talk to my students, and that's different than most everybody else in the world. And I opt to communicate to you personally and don't have a website because I spend my time personally working with students and with prospective student traders who are interested. Now, to get into what I'm talking about in terms of entering all trades in scalp mode, and then if you're a trend trader, you go into a trend mode, okay? And you need a learning plan, not a trading plan. See, a trading plan is only worthwhile if you're successful. A trading plan you should have if you're a successful trader, and you should follow your plan to success. If you're not successful, the trading is not getting you to success, and therefore there's two things you need before you need a learning plan and then a trading plan. And my course is a learning plan, and you minimize your losses by real-time reading of the bars. Okay. And so you read the risk. Most traders do this. You read the risk, you read the patterns, and you read information in past history up until the present time when you're getting into a trade. I do something different that most other traders do not do. I get into trades based on reading the risk in the last few bars prior to an entry, the last few seconds. And every entry is yes, no, and maybe. In other words, if it's a yes, you get in the trade. If it's a maybe, it's I need more information before I click on for a buy stop or a sell stop on my trading dough. And that's real-time bar reading. Do not use indicators primarily for getting into trades. You can use indicators for staying out of trades, but not for getting into trades. You get into trades by reading the bars. And after you're in a trade, you adjust your post-entry trade management, PETM, based on the level of risk assessed at entry, and then manage your trade after you're in it. And if you were to consider my course and talk to my students, you'll confirm that developing a skill set of real-time bar reading that focuses on avoiding losses, not high probability winners, is their path to achieving. And what my goal for all my students is, before you ever move to real money trading, is 80+% win-loss and no losing days. And you see one example here. And on Saturday, I show more examples of student results. Very outstanding results, a few losers. And like I say, I don't have time to go into that in detail today, but we'll do so on Saturday. So I'm just trying to give you a frame of reference here, and I'll go to the charts to show where these trades are on the chart and what I'm talking about. But reading the bar scalping added to trend trading solves the many losers problem, and that's where the Republicans come together and use the same their respective skills to minimize losers, so you become successful. That's the only way to become successful, is to minimize your losers, and that's the problem that the 97% of the traders who aren't successful, as they say, are not able to do that. Now, trend traders are predictive traders looking for high probability trends, but the too many losers. And so RTB scalping trading is non-predictive and offers more entries, including all the trend entries. And it solves the too many loser problem. And reading the bar scalping gets you to the break-even point with fewer losers, where you can opt to let your winners run if you choose to, or you can just be a scalper. Some of my students are really scalpers, and they make a good living just scalping. Others of my students are trend areas, but they both learn from me how to minimize their losers in whichever camp they are. But in both cases, you start out in what I call the scalp mode. And reading the bar scalping trades that end without a trend option offer those significant added profits even for trend traders, because if you're a trend trader and enter trades per what I teach, you're going to get into more trades, and you're going to actually just end up with some scalps, because what's going to happen is that not all the trades are going to end up being let your winners run trades, and so you're going to get some additional scalp trades just by virtue of the trends not materializing. Okay, so what are the phases of the trade that I want to talk about? The first phase is the scalp phase, and I'll go into this in more detail, but losers are defined as trades where the move from your entry, if you take a proper entry, is at most 3 ticks from your entry, and then it goes south, and eventually it never goes enough above that to get any contracts off. And the average day win divided by the average day loss is what's called the profit factor. That's your actual dollar wins after commissions divided by your average dollar loss after commissions, the ratio, if it's less than 1, you have a losing day. And I don't believe in losing days, few to none. And that's what my students achieve if they achieve it before going to real money trading. Otherwise, you don't do real money trading. And the number you shoot for is greater than 2 for that. 2 times the win column versus the loser column. Net break-evens is the next phase. Net break-evens is in the 4 to 5 tick range, and this is a set of trades where you average out no lose. These are no lose trades. And then the scalp wins are in the 6 to 9 tick range for the scalp phase. And then for this is from your entry, as you see on the charts. And the move phase, I call it, is 10 to 20 tick range. And I teach this, that we get into 10 to 20 tick moves, but we use very tight stops. But if you're a trend trader, and I don't teach this, and want to keep your stops back after you move to break even, you can do whatever trend trading you wish from the point that you keep your stops at break even and it moves ahead, and then you set your stops wherever you do as a trend trader. So what I'm saying is that I have a solution for minimizing losers, okay? And it's done in what I call the scalp phase, even if you're a trend trader. So you enter trades totally differently than you normally do as a trend trader. Okay, I'm sorry, this is, oops. Excuse me just a second here. I meant to move it on. Okay, let's talk about what these trades are like and what we mean by a scalp mode of trading. Now, I'm not going to have time here to go into great detail about what my, in my basic course, which is not true for the advanced course, what my basic rigid rules are. And the rigid rules are things that keep you out of trades, just like in the case of if you use indicators. You only see one indicator on this chart, and that's the equivalent of volume bars on a tick chart. We use tick charts because if you're going to read the bars, if you're going to read the bars as your basic technology for getting into trades, you want to read the volume in the bars, and you don't read the volume in the bars on minute charts, so you trade tick charts to read the volume in the bars. And this is a 125 tick chart. I'm showing the NASDAQ because I happen to have a recent chart here that I've put up for my webinar yesterday. And here's a trend move, if you will. Here's getting into a trade, which is a major breakout. Let's just look back here, see what happened in the day. We had a trend up from, the timestamp is Eastern here, even though I'm on the West Coast. So we trended up from 930, had a pullback, and then another breakout to a new high. Okay, this was on the 1st of November, last Thursday, I believe. And so we had a breakout here, but the real breakout to the previous range high is up here. So this is a breakout. This is what I call a pre-breakout. And what we do is we look for what we call cups and a breakout of a resistance level, and we don't take a trade until the break bar closes. And the rule is you stay out of trades that get in below the high of the break bar. You have to wait for the break bar to close, and then you can get into a trade. And typically, we get into a trade one tick above the break bar in the first 1 or 2 bars. After that, we can get in at the high of the bar, but never below the bar, never below the bar. And that's why we are able to be successful in breakout trading, which most everybody else in the world has a problem with the head fakes and so forth with with these kind of breakouts. And this trade turned into a nice move where you could have stayed in it. As it turns out, if you were a trend trader and got in here rather than earlier, you would have been stopped out somewhere, wherever your stops were as it came down. We get out right here with this little pullback. Okay? We're typically out at the worst case, we're out on this bar over here on the pullback. And over here is an actual entry that follows our rules, but we typically would not be taking this with real money because it's a reversal trade. And but we take trades that aren't real money to get the practice, and that's the blue dome versus the green dome. Green dome is real money trades. Even if we're trading simulator, we're simulating real money trades. The blue dome, and this is a teaching mechanism, and take this away if you're ever, if you're trading, learn to trade on two domes. One is simulator, and if you're trading real money, trade on the green dome and keep two domes, and judge the risk between the two. Take lower risk trades on the green, higher risk trades on the blue, and you learn by doing. You learn by trading, not by looking at indicators and so forth. And you get into trades and you learn how to decide which trades to get into by trading, just like learning to play the piano or learning to play golf. You learn to trade by trading, and you need a learning plan in doing it. Now this trade here is either a no-lose or a failed trade, depending on where you get into it. This one over here is a failed trade. But what we learn to do is not keep our stops back here. If this trade doesn't go in our favor right away, like this one did, then we get out of the trade. Okay? Then we get back into it. If it moves back, comes back, we get back into the trade. So let me show you the first trade here. I'm just going to go to 1140, just before the entry here, 11:42:17. So let's just trade the trade. And we'll get at least one trade in. Oh, I clicked on this and I didn't mean to. Look at that. Okay. Go to 11:42. 11:42:17. Okay, well this is going back. What we're going to do is we're going to enter that trade. And I'm going to just talk through the trade so you get an idea of what the trade's all about. But the most important thing is, and we'll do this more on Saturday, is to identify the trades that we don't get into and the ones that turn out to be losers. Okay. Let me see if I can get this chart back. There we go. Okay, I'm going to turn this on. We always take buy stops, so I'm going to turn the recorder on, and I'm going to be sitting up here 2 ticks above. I'm going to wait for a break bar here. I got to wait for the break bar to close. Okay, and I'm entering. I've got, we call this energy down here. This is an indicator. It has it's like how much volume per unit time. So here we are, 1 tick above, so I can get into the trade. It's 79.00, 1 tick above after the bar closes. Their bar closed. Now, is it going down? I don't jump into the trade right away. I look at the and I say, are the bulls really going to move this market up? And it is moving down. Now I can get out of this trade right now because I'm making a decision. Yes, no, and maybe every second here. Do I want to stay in the trade? Yes. Do I want to stay in the trade? Okay, now I'm in the trade. I'm going to pause a minute. This is a strategy that I've been teaching for 7 years, and every trade in the basic course has this strategy. 5 ticks, 4 contracts, and 3 of them stops at -5, one contract -4, one target at 1 contract at +3, 1 at +4, and 2 at +5, and it'll let your winners trade. It's moving half your position out of the way. Way up the dome, because we always exit by stops if we get into a let your winners run trade. Trend traders often set targets, and that's okay if you get into the trend mode, the third mode, which I don't teach. But for me, we always trade by this. So this is, you can see in hindsight, turns out to be a possible let your winners run trade. Well, why would we do this? This indicator indicates how fast the bar closes. Okay, and we got 125 contracts, 120 trades going off. Well, if it goes off in fraction of a second to 10 seconds, then that's high. That's what we call high energy. Okay, I'm going to turn it on. You can see I'm going to decide after I'm in the trade how I'm going to manage it. I don't want to have a loser. I don't care about the winner. The winner will take care of itself. I'm worried about a loser. If this thing starts going against me, I move my stops up. If it starts going in my favor, I move my stops up the trail. If it just hangs there like now, I wait for an indication of what it's going to do. And right now, the energy, what we call this energy down here is okay, it's moving in my favor, so I'll trail. Okay, now the other thing is I'm going to move my stop out of the way, my target out of the way, and do I let your winners run because it's moving in my favor. Okay, I put another stop in, so I got three contracts, and I got two stops. Now I have two contracts. I took off. I've established my profit. Okay, I've moved to break even. It's actually better than I moved to my initial stop here. Okay, it pulled back and took one of my contracts off. Okay, I didn't need to be that close. I didn't need to be that tight. Typically, I wouldn't. Now, I'm just going to speed it up here because of the time. We only got about 5 minutes left. So I'm going to speed it up here, and we'll just see the trade go. And I've got one contract in this case. I can add back another contract, which is an advanced form. So I just trail. See, okay, my stop is going to be behind here at 8200. I can be at 8200 or one tick more behind this, what we call a brick here. It's a little flag, like a bull flag. And so I'm just leave my stop right there, about 5 ticks back. Okay, I'm going to speed it up a little more here. Okay, we're going to trail. Let's stay back here at 8275 or less. Right now it's 8275. It's one tick more. Got to stay one tick back from this little brick here. Now I'm at the trade. Okay. Now let's just speed it ahead to that next. So at least we can see it. Okay, there was the trade here that I was going to do. I speeded it up a little too fast, but there was a trade right here that where it comes down, and this is a high risk trade. We typically don't take this entry right here at the one tick below the bar because it very often comes back, does this is a reversal trade, and so we get into the trade right here. Turns out to be a failed trade. Now I'll trade trades like that on Saturday. Now the point of this is that I want to make for just to get the idea out there, since we only have a few minutes left, is that there's a way for trend traders and scalpers to use the same initial phase of getting into a trade where we limit our losers to no more than 20% of our trades. If your average loss is more than 20%, you should not be trading real money if you follow my teaching. In other words, you stop trading real money. Because this approach changes. You change with the market. No matter what the market does, you adjust because you're reading the Mars. And when you learn to do this, and I have traders who have not had a losing day in well over a year, and they trade every day, not one losing day. Okay, I'm not saying you don't have to do that, but it can be done, and I'll introduce you to students who've actually done that. And let me just finish up by saying that that if you want to investigate this approach, one of the things that my courses do for you is that they rely little on software tools. See, most trading is dependent upon software tools, and mine is not. It's based on your skill, learning a skill, and so you control your destiny. You aren't in the hands of somebody who developed some magic software. You use a learning plan, and I have a trade log where you know which trades are right and which trades are wrong that I do in my trading room every day. And so you learn right judgments and right decisions that lead to consistent profitability, and that gives you confidence because you have a plan. And you can see your progress, because what happens is I've got students just starting this weeks ago and then months. And what that happens is the win-loss ratio starts out maybe a little less than 50%, pretty easy to get to 50%. Getting from 50 to 80% takes a long time. But you see your progress. And each state of the development, the students who've been there before are key to your progress, because they're the ones, rather than me, that are going to give you support that says, I've done exactly where you are, and here's how I got to the next level. And you can merge this methodology, as I said, whether you're a scalper or a trend trader. And so there's flexibility in how you use what you learn in this initial phase of limiting your losses, in how you set up your own trading. And then you can move to advanced trading and trade oil. Most of my students do that, trade oil. And that's fantastic trading. And having the student I mentioned, no losing days trading oil. I have another student trading the Russell, not oil. And I think he's had 2 losing days in this last year. And like I said, there's transparency in my approach to trading. And that's because you don't subscribe to my course unless or until you talk to my students and find out. That's how you find out what courses and things are all about, is not by listening to me without checking with my students. So that's the transparency. My room is totally open. If you're invited to make your decision, you talk to my students directly, but private messaging or whatever. Totally open. And the neat thing about this is, assuming that you master the skill, is that because you don't move to real money trading unless you really have the skill of being successful, of essentially having minimal drawdowns. Just drawdowns are no longer an issue if you make the transition to real money trading without new issues that you have to resolve. And that's always the possibility of doing that. Although for having done this now for 7 years, those that have problems that are serious in moving to real money trading actually are few. And as I said, I've got a mentoring course that has the content that I said before. Now, I also you can enter the basic course in 2 phases if you aren't sure that you want to are sure of your commitment to the full course. So that limits your initial investment to $1,500 if you choose to do that. That gets you just 1 month. Doesn't get you to success, but it gets you to the point where you can make a decision based on experience of trading. And this is what comes with the basics. I won't take the time to go over it. If you're interested, obviously you take more time to look into it and join my Saturday session. By the way, if you can't join me on Saturday, I have videos that come up that I can give you. So I thank you for taking the time here, and just note my email address, and I'm available to talk to you by phone if that's what you wish. And I notice I have a minute left here, and I was rushing through, so I did not take time to look for your questions. And so I'm just going to look and see. Showing no losing days. Yeah, I can show, I think I have one available here with no losing days that I can bring up. There we go. Weekly reports. This is real money. The previous results I was showing is a student just transitioning to real money. Here's a trader that's been trading for 4 years, and this is his weekly results. He's trading oil, and this is a scalper. I have the one I mentioned that's trading the Russell is a trend trader. He trend trades the Russell, and this trader is a scalper. He makes a low 6-figure income. In his 4th year of trading, he's in the room every day. You can talk to him, and 97% his profit factor that's the highest it goes. These 2 trades were just uh, basically just break-even trades, and this is weekly results going all the way back to December. Same thing, 89%, and this trader has not had a losing day in over a year, and he has so few losing days, and they're so insignificant that he doesn't even keep track of them. Okay, I'm out of time, and I thank you very much for your attention here, guys, and I welcome you to. It's a totally open session. You can ask all the questions you wish. So I'm going to say goodbye, and thank you very much.
Thank you. Thank you, Dr. Bill. We appreciate you being here, and look forward to having you back very soon. So thanks again for taking the time to be with us today. And at this time, I'm going to turn things over to our next speaker.